Traders. So this will be the first of a series of uh, trade recap videos where I am putting together uh, a analysis based upon levels, so highs and lows of weeks, months, days, and lower time frames, and I'm trading the momentum in the market. I'm also looking at the days of the week, the weekly cycles, the daily cycles. I'm using the order flow in the market, um, areas of support and resistance based upon the volume profile, based upon highs and lows, i.e., levels in the market, and trading, as I said, with momentum. So I'm looking to trade the peaks and troughs of the ebbs and flows of the market and catching the momentum that is being built up at those levels at swing points in the market. And I'm day trading those in the US session and Tokyo for the moment, while I'm on this side of the world in the Central Americas, or when in Europe, the London session. So this is the first of the series, and this was a trade taken on Fed Day early on. Now, my go-to instruments are the higher volatile instruments rather than what I would call Snorex, Forex, Snorex. What I mean by that is you tend to see um, decisive parabolic moves out of instruments such as silver, gold, oil, and then the indices, US 30, NAS, S&P, rather than trading the Forex pairs that can be somewhat slower in response to breakouts and higher time frame traders that are pushing the market. Um, the indices and commodities are far more responsive. So that's my go-to. But on a day like today, the Fed day, I wanted to avoid trading as we came into the final countdown um, to the Fed, which is sort of the Wall Street open and onwards. But anything before then, with the currency markets open first in New York and accompanied by uh, traders around 8 a.m., there were going to be opportunities. And I caught that out of a um, series of instruments on my watch list. The go-to one was dollar Swiss, accompanied by sterling CAD, dollar CAD, but we took the dollar Swiss. And dollar Swiss was a breakout continuation trade in line with the bigger picture impulse correction continuation. There are prospects of a move even lower when we pull out to the daily chart. I like to measure the corrective high to target into this area, and I compare this to whatever might be looking hot, looking left, looking at volume area uh, profiles on the weekly and monthly charts. But just to keep this short and sweet, this was the trade today to go short. I'm not hanging on to anything into the Fed, so it was a nail and bail scenario to last week's lows. Lovely trade, um, including spread and commissions, 3.5 R in a parabolic explosive move as the treasury markets opened up catching all of that. So an 8:15 a.m. trade hitting target just into the Wall Street Open. So about an hour this trade took to get to target. So that's the first of a series of videos that will be posted, and thank you for watching.